Good morning, welcome to the Daily News Podcast. Today is April 11th, 2026.
U.S. negotiators have arrived in Pakistan for high-stakes ceasefire talks with Iran, as the conflict enters its 43rd day. The fighting has drawn in Israel and Hezbollah, with mounting casualties reported in Lebanon and escalating cross-border fire along the Israel-Lebanon border. An Israeli airstrike this week killed members of Lebanon's security forces, raising fears the war could widen even further. President Trump says the Strait of Hormuz will reopen soon, signaling possible de-escalation. That's a big deal, because roughly a fifth of the world's oil passes through that narrow waterway. But major sticking points remain in the talks, including sanctions relief, nuclear oversight, and regional security guarantees. Both sides are under intense domestic political pressure, which makes compromise difficult. The outcome of these talks could reshape security dynamics across the Middle East and send shockwaves through global energy markets.
If Hormuz really does reopen soon, that's going to calm markets in a hurry. But with this many players involved, one misstep could undo days of diplomacy. Back here in the U.S., a federal court is now reviewing a legal challenge to President Trump's sweeping new global tariffs. The administration argues the tariffs are central to its economic agenda and necessary to protect American industries. Critics say they risk igniting trade wars and pushing up consumer prices at a time when inflation is still sensitive. The court's decision could have broad implications for global trade flows and for U.S. relationships with key allies. Meanwhile, the White House has warned staff against misusing confidential information after suspicious oil futures trades surfaced ahead of the president's recent Iran-related actions. That's raising fresh concerns about potential insider trading tied to geopolitical developments. Taken together, it's a reminder that trade policy and foreign policy are tightly intertwined, and markets are watching both very closely.
And if there's even a hint of insider advantage in energy markets, you can bet regulators are going to come down hard. Investors hate uncertainty, especially political uncertainty. On the tech and space front, NASA's Artemis II mission has successfully completed what officials are calling a perfect Pacific splashdown off the coast of San Diego. This was a critical test flight in NASA's Return to the Moon program. The successful re-entry and recovery validate key systems that will eventually carry astronauts around the moon under the Artemis program. It's a major milestone not just for lunar ambitions, but for longer-term plans that include missions to Mars. After years of delays and budget pressure, NASA finally has a tangible win to point to. The agency says data from this mission will feed directly into preparations for the next crewed phase. For space exploration fans, this is the clearest sign yet that the moon is firmly back on the agenda.
That splashdown footage was incredible. It feels like we're watching the early chapters of a new space race, just with more private players in the mix. In business news, Intel stock has surged 51% over just 8 consecutive sessions, marking its longest winning streak since 2023. Analysts point to renewed optimism around the company's turnaround strategy and momentum from recent headline-making deals. The rally suggests investors are regaining confidence in Intel's ability to compete in the fiercely competitive semiconductor space. At the same time, CoreWeave shares jumped after announcing a multi-year AI cloud infrastructure partnership with Anthropic, underscoring the insatiable demand for specialized AI computing power. Between chips and AI cloud capacity, the market is clearly betting that the next wave of growth is still very much tied to artificial intelligence infrastructure.
The AI gold rush isn't slowing down. It's just getting more expensive to participate. Chips and cloud are the new oil in railroads. And finally, YouTube is raising prices across all its premium subscription tiers in the U.S., with the individual plan climbing to $15.99 a month starting in June. The hike affects ad-free viewing and its bundled music service, and it adds to the growing list of streaming platforms getting more expensive. Users are already debating online whether the service is still worth it. The increase reflects broader price pressure across digital entertainment as companies push for profitability over pure subscriber growth.
Streaming fatigue is real. Every few months, it feels like another bill quietly ticks up. That's it for today's Daily News Podcast.
Thanks for starting your morning with us.
We'll be back tomorrow with more headlines that matter. Have a great day.